deep with the RPG here. We're playing E.V.O. Search for Eden with any % bird route, which means that I'll be getting the bird on stage 3 and beating the game with the bird here, which is a little bit different than the mammal route. I think it's a little bit slower because you have to go out of your way and grind for some experience on the bird, but ultimately the bird actually does get through the stages quicker. You can fly over water in 3 stages. Speeds things up because you don't have to go through the transformation and whatnot, and a few other things that make it faster, like on you don't have to go out of your way to get the man. You can just leave this screen with the Triceratops to turn you into mammal. But yeah, shout out to the Rollin' Deep crew. Rollin' Deep, my sons. We're going to be holding it down with a sub 50 minute E.V.O. Search for Eden. I really don't give a shit about what my PB is here because it's fucking terrible. But I'm going to be holding it down with a Rollin' Deep PB with this run, and we're going to be getting a sub 50 Rollin' Deep any % bird run and E.V.O. Search for Eden. Rollin' Deep, my sons. Stay fresh, stay fly, hold it down, rollin' deep, sons. Rollin' deep! Rolling deep with the green split. I'm all about the green stuff, and this looks like somewhat of an okay run. Rolling deep. What the fuck is this, a red split? I mean, you better fucking reset or do something about that shit, man. Step up your fucking game. With a fucking red split, man, what the hell, man, am I supposed to do with this shit, man? Losing time, wasting time, just fucking, just disgraceful, fucking bullshit, man. Not rolling deep. Damn, son, the Glod rolling deep with that fresh new gold split. I'm rolling deeper than I've ever rolled before on this motherfucking split. Rolling way too deep, my sons. Whoa! Damn, son, the Glod rolling deep with that fresh new gold split. I'm rolling deeper than I've ever rolled before on this motherfucking split. Rolling way too deep, my sons. Whoa! Well, I'm still ahead of my PB, but this split's absolutely disgraceful. I lost time. What a fucking joke. Step up your game, RPG. What the fuck was that? Fucking abomination. Fucking garbage, man. Get that fucking shit out of here and get a fucking green split. Fuck these half-stepping, motherfucking, fucking losing time splits, man. What the fuck? Well, I'm still ahead of my PB, but this split's absolutely disgraceful. I lost time. What a fucking joke. Step up your game, RPG. What the fuck was that? Fucking abomination. Fucking garbage, man. Get that fucking shit out of here and get a fucking green split. Fuck these half-stepping motherfucking, you know, fucking losing time splits, man. What the fuck? What the fuck is this, a red split? I mean, you better fucking reset or do something about that shit, man. Step up your fucking game. With a fucking red split, man, what the hell, man, am I supposed to do with this shit, man? Losing time, wasting time, just fucking, just disgraceful, fucking bullshit, man. Not rolling deep.
Good evening, everyone. Can everyone hear me okay? My connectivity stays on. It keeps saying that there's a server issue as all my other connections are working fabulously, so we'll just keep everything crossed. So happy Valentine's Day to all. Hopefully you enjoyed most of your day and aren't too upset that you have your last final date of the evening with all of us. Oh, sorry about that, Tori. I'm hoping that that'll stop, or at least not be as annoying as it could be. So this week we're going to talk about some of the additional assurance services that we can and sometimes do participate in that look at historical financial information, and fingers definitely crossed, so thank you for that.
With the fucking red split, man, what the hell, man? I'm supposed to do
So
this
when we think
shit,
about the
man.
different engagements that we can become involved in terms of our efforts as certified public accountants, there are some other things that we can actually offer in terms of services that aren't as much of complete assertions as we've been looking at over the last 8 weeks. I realize that much of our effort thus far has been focused on proving lots of things. And when we look at other types of engagements that we offer, like reviews or compilations, it's definitely a different focus. So, audits are generally based on assurances of that information, making sure that we can prove it out, definitely making sure that we have summary of the financial information, audited financial statements that are using reporting framework other than GAAP, so sometimes we might have some special purpose framework or other countries' framework like IFRS. Additional GAS, General Accepted Auditing Standard audits, we can have a single financial statement and specified elements, or personal financial statements are also things that we as accountants can get involved in. We also, when we look at historical information, we can look at trending historical information by reviewing historical financial statements and asking some general questions, but really we're not providing much assurance. We can also look at compilation, where really, as the word implied, we're just compiling the information together and putting it together in appropriate format. We're providing no assurance whatsoever. Very different from what we've focused on the last 8 weeks, for sure. So the types of attestation services that we can provide, that are different from the audit, we can do examinations where we're looking for examining just certain parts, certain pieces of financial data. We can offer reviews, which is much lighter, it's kind of a audit light, if you will, in terms of we're going to ask some general questions of management. We're going to look at some documentation for the review, but for the most part, pretty skimpy on the supporting account balances. And then we can also involve ourselves in agreed upon procedures where we might want to look at maybe if they're looking to go out to do a public offering of stock, we might actually go through and agree to do some analysis for them. So agreed upon procedures, as the words imply, it can be very specific to a company and it can be very broad in nature. But that's why when we get ourselves involved in any types of these attestation services, we'd be very clear in our letter or memorandum of understanding and engagement to ensure that we are absolutely clear about what we're doing for the client and what responsibilities we're taking. In terms of professional literature terms, auditor is used for most engagements under the generally accepted auditing standards, even though a review and a compilation aren't a true audit. So that's why we have to be very careful in the way we approach things and what we are doing with our public and what we're doing for our customers or clients. Accountants is also used for financial statement review and compilation, and that's where we have to again be very clear about what it is we're doing. Practitioners in general is a term used in the attestation standards and most of the other assurance service documentation in terms of implying that we're a licensed CPA, and that's why again we don't want to be putting ourselves in a position to take on more liability than we had engaged ourselves in. Audits do engage us in a great deal of liability versus a review or a compilation or agreed upon procedures. Much less liability, much less substance we're putting in our efforts. When we do provide these additional services, these reports on compliance with the contractual agreement or the regulatory requirements relate to the audited financial statements, whereas some of our other activity will be looking at letters from underwriters, especially when they're going out to issue new stock, or we might be looking at summary of financial statements from prior years where we're just trying to put prior unaudited years, especially when you look at IPOs, initial price offerings of issuing stock. So when a company first goes public, you might provide some trend data on non-audited prior year historical financial statements, and that's where you just have to be very clear again about what you are providing in terms of compilation versus review versus audit. Very different standards that we will be looking at in terms of our efforts. When we think about the regulatory requirements and debt agreements, we might have a report prepared for bond trustees where, for the most part, we're trying to ensure that the company's in compliance with certain bond indentures, certain financial ratios, that a lot of times when you think about bond companies, they issue bonds. They're willing to underwrite the bonds of the issuing company if they maintain certain financial ratios, certain current ratios, certain restrictions in terms of getting into additional debt. So we might be providing some of that type of reporting activity in an agreed upon format so that we're clear that we're able to provide the right pieces to the right audience, and then attaching to that the letter or a letter stating exactly what it is we're providing. To provide this service, auditors have to first have performed an audit of related financial statements. So when you look at the current year, most of the time you have to have the current year audited in terms of issuing bonds. And then in those prior years, you may find that those aren't necessarily audited, but they may be just compiled. And I apologize for the snorting in the background again. You know who has decided she needs my attention. So these comfort letters are kind of what we often refer to these as, where we provide investment banking firms an independent perspective, an independent audit financial statement and registration statement. So when they do those initial price offerings or those IPOs. So included in those comfort letters, you're going to have the independence of the auditor, knowing that we're not influenced by management or anything of that nature. We're going to talk about whether the financial statements have been audited or schedules included have just been compiled and whether they comply with any SEC requirements or regulations. We're going to make sure that any unaudited financial statement is condensed in the interim financial information, and pro forma information is presented in such a manner that we're clear about the fact that they aren't audited. They're compiled or reviewed. If there's any changes in selected financial statements items during a period subsequent to the dates, we'll make sure that we disclose that to the registrant statement. And so like change in accounting principle, anything of that nature, definitely want to be clear about those changes. tables and statistical information or other financial information that we have to include in the registration statement for SEC, the Securities and Exchange Commission filings, would be included in that, and again being clear about any type of assurance or lack of insurance that we might be providing with that data. Negative assurance as to whether certain non-financial statement information included in the registration complies with the SEC regulations. So if you have a client that is looking to go out and do their initial price offering with the SEC, it's extremely critical that you understand how to do those filings, those registrants. Not everybody that is a public CPA performs this type of work. It's very specialized in terms of knowing how to file the SEC forms. It's also a larger risk because you have a broader audience of users of that financial information, which just by definition opens up those relying on those statements, therefore opens up the liability scenario. When we think about summary financial statements, we can think about the fact these are often referred to as condensed financial statements, so they're really collapsing like accounts. So think about cash and cash equivalents, net accounts receivable, net PP&E or fixed assets. We really collapse a lot of things. So what may have looked like a very lengthy statement might be very condensed when we actually get to the point of providing the summary data. When we include less detail than the audited financial statement, we want to be clear about that, and sometimes that might mean that we're putting more information in some ancillary or addendum schedules so that we can ensure that the summary financial statements still make sense and they still are consistent with the way that the actual audited financial statements are done. So it's, again, just looking at taking the data into bigger chunks, just breaking the pie into bigger pieces rather than smaller. In the world of GAAP, we always assume that we're using generally accepted accounting principles, but there are times where we may be including financial statements prepared in accordance with special purpose financial reporting frameworks. So there might be times when we have information that is required to be prepared in IFRS or some other type of regulatory filing. I can think of FERC, which is the Federal Energy Regulatory Compliance. If you're a public utility or a utility, you have to actually prepare your data in terms of FERC, Federal Energy Regulatory Compliance. You have to follow their rules in preparing the financial statements, because that way all those types of industry entities, entities within that industry can be compared like apples to apples if they're all following the same regulatory rules. If we're using something like that, we have to be clear about the fact that we're using a financial reporting framework that is different from GAAP, or if we're doing some type of IFRS calculation or IFRS compliance, we're being clear about the fact that we're following IFRS rather than GAAP. What I think you're hoping, or what I'm hoping you're taking away, is whenever we do anything other than audited GAAP statements, we just need to be crystal clear about what that is so that there is no confusion whatsoever. More confusion, more risk. That's kind of the way I associate it. So there are some times where we'll be asked or could be asked to prepare special purpose financial reporting, so we could actually be required to use a cash basis of reporting, not out of the realm of possibility if your only users are banks. You might be actually asked to do some tax basis accounting. Think about the way that we do different books for tax versus GAAP under our fixed assets. The regulatory basis example I just gave you with the Federal Energy Regulatory Commission, FERC, F-E-R-C. And then we might just have some contractual basis accounting that we're following. Think about governmental contracts. They might require that certain things be reported in certain ways if their contracts are based on, for example, a cost plus reimbursement, if you will. And this is common if you think about doing government work on military installations, as an example. I live near what's called JBLM, Joint Base Lewis McChord, and so we do have a lot of contractors that may do work for the military, and so a lot of times they might ask them to prepare audited financial data to get reimbursed for their cost plus, to make sure that only the right costs were included for the reimbursement. If we do something where we're doing some special purpose financial reporting, when we do our letter of our resulting conclusive letter, we want to be clear about the fact that what we've done. So in this example, what you'll notice is they've talked about the fact they've audited the accompanying financial statements, financial statement of assets and liabilities arising from cash transactions, and the related statement of revenue collected and expenses paid, again from a cash basis. So we're just crystal clear in any type of reporting that we're going to provide for those types of engagements, so that the user of those financial statements understands what we're committing to or what we're asserting to. This is actually straight from the chapter, but it's just kind of an overview of some of the reporting requirements where we want to be clear about, for example, if we're asked to describe description of purpose of which the special purpose statements are prepared. If you're looking for a cash or tax basis, you'll notice that under cash or tax basis, if it's a single opinion on special purpose, there's going to be sorry about that. Under a contractual basis, you're going to have to make sure that you're clear about the description of purpose for why you're auditing under that basis. So consider my my JBLM example where you're asking to audit actual spend for a contractor of government looking for reimbursement plus cost, reimbursement of cost plus margin in those types of contracts. So this is just kind of giving you an example of lots of different ways that we can go at not just producing audited financial statements, but giving assurance that other rule bases have been followed. When we think about financial reporting framework generally accepted in other countries, the one, of course, that comes to mind is IFRS, International Financial Reporting Standards. This is issued by the IASB, the International Accounting Standard Board. So U.S. companies can prepare financial statements for use in other countries. So if they're actually wanting to be on the stock exchange in Germany, for example, they might have to file under IFRS. Auditors can follow the same generally accepted fieldwork standards that the IFCPA provides to the extent that it makes sense. They may actually have to reach out to the IASB as well in terms of getting additional guidance that commits to our example for Germany. With the report that we're going to issue will depend on the expected use of the financial statement, and that's really true of any report we issue. It should be relative to the expected use of the financial statements. You know, everything we've talked about thus far has been, you know, the results of preparing an audit, and hopefully we're issuing a clean opinion, which means we found everything was wonderful. But in these types of scenarios where we're doing something other than an audit, we just want to be clear about understanding how the report's going to be used so that our report that we're issuing makes sense. So if it's only being used in the U.S., for example, we issue a U.S. report that's modified to reflect the accounting principle of the other country. And we issue a report form of the other country. If we're using inside the U.S. as well as outside the U.S., we'd have two reports. One, the U.S.'s unmodified report for emphasis of a matter paragraph that we've talked about in prior chapter. Or, and then secondly, either an opinion from only outside the U.S. Above. So we just don't want to have anybody be able to come back to us and say, hey, this is what I thought you were doing, and us come back and say, no, that's not what we were doing. We weren't providing that type of assurance. We want clarity. We cannot have enough clarity as far as I'm concerned. I like to spell it all out so nobody is surprised. Under general accepted auditing standards, a single financial statement and specified elements, we can certainly do that type of work as well. We may actually just look at specific accounts or items of a financial statement. So in certain situations or scenarios, we might have somebody that's just wanting to have their accounts receivable validated. Maybe they're looking to use the accounts receivable as collateral for a line of credit instead of the entire financial position. So these examples that I'm giving you are ones that I've seen in my career, but they're not necessarily, common, because a lot of times, especially in today's environment, we actually see much more in large companies. You're going to go through audits. It's the small to mid-sized companies that may do reviews or compilations or specific elements type of work. We also might find, especially if you're in a small to medium-sized company and you're asking an owner to put his personal wealth on the line, you may find in those situations that personal financial statements are being asked to be either audited, reviewed, or compiled. And just be clear about the version or the work that you're doing against that personal statement. Are you auditing it, which means a whole different litany of work versus a compilation or even a review. Sorry about that. Give me 1 minute. My slide, decided it didn't want to show. There it goes. Sorry about that. When auditors can be engaged to attest only to a single financial statement, as I touched on, or we can be engaged to attest just on a specific element or account or item in the financial statement. So my example prior was the accounts receivable, but you may have a report on leasee's revenue requested by the leasee. It may be part of the lease agreement requirement. It's what did we have the other? Actually, we had something the other day where we had, I had a friend of mine call me from that works for a company I used to work for, and one of the local municipalities in Oregon was asking for confirmation in terms of just looking at the expense detail behind one account that they were looking to get a rebate on. So they have invested a certain amount of money into updating a piece of equipment on a plant site, and based on that, based on proving that's what they did, they were going to be able to get 75% of that in the form of a reimbursable rebate from the municipality power district. And in that example, they wanted that done by a CPA because they're giving the assurance from a third party saying, yeah, these are the things that they spent on this particular upgraded project, and we're confirming that we've looked at those to make sure that happened. Materiality for specified elements is generally less than it would be in an audit because we're usually looking at the full detail. So if in my example of the public utilities district where they're being asked to provide invoice level detail, there isn't anything that was considered immaterial. All things were going to be looked at because they were going to receive 75% of exact dollar spend that was appropriately spent. So there was truly, I saw, she said there were invoices in the stack that, were a couple bucks because they were just little pieces, and they really had to provide all that level of detail to be audited. In terms of personal financial statements, examples that, of course, especially this time of year, politicians, certainly if they're providing any type of public outlay of information, they may want those to be audited in terms of making sure that, they're not completely filling us with BS. So you're going to see certainly more of that type of activity this year since we're in an election year. And the example I already kind of gave you was the large loan application. If you're asking for a personal guarantee by one of the majority owners in a small to mid-sized company, they're going to want to make sure that there's value there for the company to be even asking for some type of personal guarantee. So the assets generally will be shown at estimated current value, and that's usually decently straightforward to do because you're usually talking real estate, so you can generally do some competitive, some comprehensive analysis or comparative analysis. The liabilities are generally presented at estimated current amount, so if you have long-term leases, you'd present value those. When you look at the balance sheet, it's really a statement of financial condition shown where it's going to have your assets less your liabilities to inevitably show the individual's net worth or what they have left to cover anything should this guarantee ever have to be worked on. From the income statement perspective, you're really just looking at what's causing the changes of net worth. Are you increasing your net worth because you have an income in terms of employment dollars coming in, or do you have investments in stocks or bonds and anticipated expectations? So those are the types of things that you'd be looking for in an audit of a personal financial statement. Reviews for non-public companies. So when we think about reviews for non-public companies, we may not need an audit of an annual report, because a lot of times when we're looking at doing review work, we're usually looking at small to mid-sized companies who are looking for a review in order to generally maybe to back up or to give substance to a line of credit. That's the most common examples I've seen or been involved in when I've worked for small to medium-sized companies. We've been asked to provide an annual review because they knew the amount of money you'd spend on a review wasn't necessary for in this example, I think we had about a $100,000 line of credit that ebbed and flowed. It was a revolving line. And we used as collateral our inventory and accounts receivable. So a review was all that they required, but that was still expensive. I think about this size company, $5 million of annual revenue. And we still ended up having to pay about, I think we still ended up paying about $20,000 for the auditors to perform a review. So it's a lot cheaper than an audit, but not cheap, is what I'm trying to say. We still have to follow the Statement of Standards of Accounting and Review Services, and what that really means is we're going to perform some analytical procedures, looking at year-over-year comparisons, and at least asking questions of management and others in the organization about what's causing the changes, if we've seen big swings, do they have any expectations of big swings in the current year where they're isolated one-time instances. Those types of things will help us create the review and put any type of notations or call out anything specifically that makes sense for us to call out. We'll definitely get obtain a representation letter from management relating to the financial statements, because ultimately they're the ones that are actually taking on or taking ownership of the financial statements. They are reviewed, but it's still their data that they're taking on. We'll also then initiate or issue a report at the end of the review providing limited assurance, or for the most part negative assurance, because we're saying we've reviewed and that's all we've done. We haven't done a detailed audit or anything of that nature. We just did a review, which is much more limited scope.
Completely fucked that up, and
when we think about review procedures for non-public companies, certainly you want to make sure you screen your clients. I wouldn't just do a review for anybody that came in and asked. You want to make sure that they're reputable, that they're not somebody that's kind of shady or fly-by-night, because inevitably we're putting our reputation on the line with them to some extent. We'd create an engagement letter that was very clear about the work we were going to do, or engaging the client in, what their responsibilities are, what our responsibilities are. We talk about the review procedures, the fact that we have,
overall, there's
we don't have any knowledge of the client's internal controls, because that's not what we were engaged to do. We were engaged to review the financial statement, produce
I'm just
some
glad
analysis
that now I
based
have a
on
PV
fundamental
with a video
procedures and inquiries from
that I can
management.
submit, and
We'll
I'll
look
go
at
over
some substance of
all the because
evidence, but it's very,
after every
like,
report, all the
I
solutions
think about
run,
my
I like
experience.
to
We
go over all
provide
the
copies of
the,
bank statements, we provide copy of lease agreements, we provide a subsidiary ledger of the accounts receivable detail, but they never tested any
like
of
if
the
other people submit, I'd like to have them do that
account
too, but if they don't do it, it's
any
not
of
going to
invoices going
make the run
going
valid
into
or
the
anything.
account,
It's
because
just
that
I
wasn't
have to
objective
do
to the
more
work.
work looking at it.
We then obtain a representation letter in
so
which management acknowledges their responsibility that they've
we
complied
go
with
over all the
GAAP.
evolutions.
They've acknowledged
and
their responsibility,
and
that
I'll
their
check to make sure that
responsibility to prevent and detect fraud and to divulge anything that they suspect
timer. I
to the
set
auditor.
timer on
And
reset
that
on
inevitably
this
they're
one
taking
because
responsibility
just
for truthfully
to
and
show
fully
that
answering
I've
all our
reviewed all the
inquiries. I mean, if
evolutions,
the client lies to you,
because I think
or you
that's
have to be clear about
when doing this one.
clear
So I
about
think that's
making
a
sure
fair
that you
time
screen your
and,
clients. You don't want to be
because all the
find
other
out
ones
later
start on
you were
stage
working your
select,
mom.
this one starts on
That would be a
reset,
bad
and
deal.
I'll get into that and whatnot.
When we think about the review
well,
report, You'll notice the first paragraph is
Roll
much
deep
different. When we were
credits.
doing an audit, it
Fire
would talk about the
that
fact that
one.
we had audited.
Please.
In a review report, you
100%
find that,
report
you
all
know,
evolutions.
that's exactly what we did. We
I think
reviewed
I'm
the
fine with
company's
that
financial
because it's a
statements.
little gritty.
And for the most part, we're not aware of anything
This is
significant.
really the
Much
only
different
problem,
flavor,
but I mean, I was
much
going all
different
around.
tone of paragraph compared to the first
Made
paragraph
about
of
a
the
minute's
audit
worth of
report.
mistakes, and
In the second
started
paragraph,
to
we go through and talk about
go over all
what
the
that means. We
evolutions
review
and,
by making inquiries of management,
wrap it up.
producing or running through some
But
analytical
yeah,
procedures.
we're doing the marathon run.
And it is
soon,
substantially less in
that
scope
goes
than an
well.
audit, and that's we're clearly delineating that out so that
Check
nobody's
all the
confused.
evolutions.
And they did, and
so
we're
there's
not
no
expressing
bullshit.
an opinion. But we are not expressing such an opinion. We're just saying that we reviewed and it's consistent with, and the results are consistent with the work that we did. When we look at the third paragraph, again, based on the review,
So I'll be doing a
the
new game
CPA
plus
saying that we're not aware of any
next.
material modifications that
It's
should be
easier
made.
to do new
But
game
again,
plus
we're not
run
providing
after,
an assertion that everything is 100% accurate. We're saying that we're not aware of any material modifications. That's much different than saying that we've asserted that everything looks really good. And you're therefore taking on less liability. If there has been any modifications that need to be made, for example, if there was a departure from GAAP, like they followed a cash basis
here, if I go
approach to recording data, we'd want to make sure we modify the paragraph appropriately. If there's no modifications required, if there's a lack of consistent application of GAAP or major uncertainties, including like are they going to continue to be there year after year, or any limitations of scope, then we just have to make sure that we modify the report appropriately so again the parties using the financial data are clear about what they're looking at and clear about the resulting audit report, or in this case review report we're issuing. If we're doing a review for a public company, I've actually never been involved in this type of environment, so most of the time when you look at public companies, they usually, quite honestly, are being audited. So in this example, they talk about the fact that the public companies, they do have to do some quarterly financial reporting for their 10Qs, but most of the time I've always found that being done internally, not by hiring external auditors, but it's maybe if you had a transition or did not, or decided to outsource that instead of doing that internally.